Hey everyone, hopefully you're having a good day. My name's Andy. My channel's Finding Value. We're going to do our daily technical analysis update. Dollar, yields, precious metals, and commodity and ETFs, at least the ones that I follow. If you guys need any help with anything commodity related or stock market related, if you're wondering how these markets kind of operate from a big picture view, definitely check out finding-value.com, become a platinum member, and you can use the word discount in the coupon code if you want a discount. Let's dive in. I'll give you my financial opinions around it. We do have the DXY here. This is a relative strength indicator of the dollar. So it's the dollar priced against other currencies. The momentum is definitely to the upside, but today we are heading a little bit lower, down 0.37%, getting a little bit of a relaxation in the DXY. We also had yields fall. So we had a pretty large down day for yields today at 1.3%. That is a bearish engulfing, which generally heads lower in the short term. Looking at the 30-year yield, we didn't really have the 30-year move too much today. It's basically anchored where it was at, 0.18%. So what we saw is the curve is normalizing to some extent today. A little bit of fear in the market is what I would call it. And that normalization generally translates into higher precious metals prices. Bond prices flat on the 20-year, up 0.25%. I call that flat. So this has just been moving kind of in a sideways type movement. And if yields do go down, we should see this guy head higher. This could be kind of that lone island where it gaps down, gaps up, which is a bottoming pattern where we could head higher in the short term. Looking at the TYX-TNX ratio, the curve is normalizing. That's when the curve goes higher, it is normalizing. That TYX is basically anchored. TNX is going down, which is going to increase this ratio. When this ratio increases, generally speaking, that is a tailwind behind precious metals prices, especially gold. Looking at the CRB index, we were down a little bit today in some of the commodities, definitely down in the CRB index, down 0.88%. When commodities go up, it is viewed as inflationary, and inflation generally gets seen in the 10-year yield going higher with an inverted yield curve to some extent. But today, that's all unwinding, and we're seeing commodity prices go down today. The CRB to S&P 500, as weirdly as this is looking like it wants to outperform. So we've got conflicting data across the board here, which happens sometimes. So we had the CRB to S&P 500 getting stronger. And at the same time, we had the 10-year fall, the curve normalize, and we're seeing commodities, oil in particular, go down a little bit. Looking at gold heading a little bit higher. Is this a bottom? I'm not convinced yet. But again, you don't need me to be convinced. What makes me think that this may or may not be a bottom? What am I looking at and why? So, big picture view, we are up against this resistance line, and we hit our head on a monthly candlestick. We're coming down. I don't see the green army after this candlestick here because that is a bearish type candlestick. So if we zoom into it, you can tell that we basically broke below that trend line. We're coming up to tag it again. And are we going to roll back over kind of in an ABC correction is what I'm thinking. Now, it doesn't matter what I think. It matters what the market bears. And kind of looking at this and zooming in, I just don't see the big buying pressure yet. It doesn't mean it can't show up, but we've got large selling pressure here, no buying pressure really, a little bit through here. But again, we got the hammer laid down through this selling pressure here. So I don't know if it's necessarily done. I need to see the green army show up. I need to see more buying pressure for me to be convinced that we are going to break through here and move on up. So again, I'm not trying to make predictions. I'm just saying that the selling pressure in gold in the short term is still there. And usually by the time we want to turn and move up, that selling pressure is gone. And it's still hanging around, which makes me think we've got either more sideways action or maybe even a little bit more back and forth type action. Maybe a falling wedge, whatever it is. Silver is also exhibiting that. We've got these large selling pressure candlesticks all over the place with not much buying pressure showing up. So I have to stay bearish until I see that trend reverse, until we get to a support level and the trend reverses. You can see that this one had a big trend, a consolidation period, another big trend lower. That's an ABC correction. And then we had the big kind of sideways movement before moving on up. That's what I'm thinking is going to happen coming on back here. Platinum also higher today, but again, we're getting these large selling pressure candlesticks. They're all still interjected in here, which means there's sellers still in there. Otherwise, it's being manipulated and they want the price to go lower and they're just hammering this thing lower. That's also a possibility. But there's selling pressure that still exists, and I don't think that we're just going to fly higher. Usually, you get large green candlesticks, small red candlesticks, and then you trend on up. And I just don't see that trend change yet, but it could change at any second. XAU to go ratio down a little bit. Again, is this kind of that ABC correction? I still think the momentum is heading lower for this ratio where the gold and silver mining companies will underperform gold itself. GDX selling off even in the face of gold moving higher. So we have been trending lower here, and I still think that may continue. SILJ is also doing the same thing, and we're right on support. We'll see if that support holds. Crude oil down 1.42%, pretty volatile day. We were up feeling like heroes. Now we're down feeling like chumps. But that happens. It's the way it is. And we've been just basically bouncing back and forth. Price moving up, price moving down. Buyers and sellers kind of equal to each other. And we haven't had a breakout in either direction. Natural gas down a little bit. Could we be coming back for a double bottom? Let's hope so. Get some cheap shares. I'm all for cheap shares. Now, the longer this natural gas price stays down, that will have a weighing effect on the natural gas producers, which could pull those natural gas producers down with it for some time. XOP, yeah, you know me, getting sold off today, down 2.5%. We are getting close to the support level. This trend line down here, that blue trend line, and that should act as support. And we'll see what happens when we get there. OIH also selling off. We're back to support. A little bit of a stronger sell-off today. And we could see further downside. Generally, when you start to see these candlesticks pick up in size, the opening and closing price, they really start to get big like this. Usually it takes a little bit of time to work that off. So when we see those, usually you're coming on an uptrend and you start seeing them kind of interject themselves throughout. So we could see a pullback here in the short term, just in general for oil services and maybe even the exploration production companies, XOP, in the short term until we see some buying pressure come on in. Sprott Physical Uranium Trust, again, I don't see any big green candlesticks, mainly big selling pressure, small buying pressure that generally works its way down in a stair-stepping pattern. URNM, small sell-off today, minus 0.76. We are getting these little candlesticks. Are we going to try to turn? I got to see a candlestick that's a big reversal up candlestick or something like that, or something with a wick on the bottom. We haven't seen it yet. And we want to stay above this low here, about $30. We want to stay above that. We don't want to go blowing on down. If we blow on down, we could see a much larger pullback in uranium if we were to do that. I'm not calling for it. I'm just saying it's a possibility. We also have kind of a shoulder, head, shoulder, and a short-term deal, and maybe we can head out of this. It depends on if the buyers show up and what the market conditions are and what interest rates do. It's dependent on a whole bunch of different things and money flows. TAN still selling off. We're still squeezing up in this gigantic pattern here. So we're still squeezing. Looks good still. Everything's intact for solar. COPX getting a little bit more selling pressure here, down 4%. Again, I still think this is going to head lower in the short term. We've got large selling pressure. It's finishing strong. We are at support level in this general vicinity. We'll see what happens if it acts as support. There's actually a lot of support through here. You can see all those shares that traded all through here. So, but again, lots of momentum to the downside. It's got to get worked off. Lithium, still some selling pressure out there, guys. We could see a further pullback in lithium. So that's looking a little bit weak. REMX is also putting in a bearish engulfing. We'll see if we got a little more downside pressure in this thing to go. S&P 500 getting shellacked. Definitely getting shellacked. Nice strong closing too. We could see a bigger pullback here in the S&P 500, especially if we break below this trend line here, this blue trend line. That's the blue trend line running across here. We could come back and break down below it if the sellers want to push it there. Same with the NASDAQ. We're starting to break to the downside. A little bit more, a little stronger selling pressure going on today. So we could see some further downside. We are at a support area though. And we'll have to see what happens. EEM, that's also selling off. We had support here, kind of popped higher, and we're starting to head lower. So looks like we've got some selling pressure in some of these indexes right now. We're starting to break down. Home builders selling off a little bit today, a little bit more selling pressure in the markets. We'll see if that trend line or support line holds. MU also selling off. That was at support. So some things are starting to sell off. It's starting to look a little uglier in the markets in the short term. Copper down about 0.5%. This thing's just been swinging back and forth between the buyers and sellers. Lumber still hanging in there, still looks good. And it's just moving sideways. Buyers equal sellers. Same with iron ore. Buyers equal to sellers. We're just moving sideways there. Nickel selling off a little bit. We're still above this trend line that I put in where we hit it a few times from the bottom and top side. If we lose this, we could see a further pullback in nickel. Now, is this the Batman pattern? It could be. It could be. What's the Batman pattern? Batman patterns where you come up, you come down, you come up, and then you head lower. And this is your Batman pattern where we could come a little bit, we could come back quite a bit lower in nickel. That is a possibility there. Aluminum, we're still above support. We've got deficits out in the future of aluminum. Right now, what's I'll say on the minds, I think, of most people is recession, pullback, stuff like that, I think is out there. And right now, aluminum still looks really good. Baltic Dry Index, that guy's rocketing higher. It actually looks really strong. This is a really undervalued sector at the moment, and it is improving to the upside. Coal, again, I still think we have a little bit more downside maybe this spring. Maybe we come back here before heading higher. And then we've got Ethereum. That guy is getting smoked to the downside today. And maybe we get a pullback to this peak here, or trend line there. We do have a trend line here. We came up, we're coming back. But yeah, a lot more selling pressure in Ethereum and Bitcoin. So the markets are looking a little bit weaker today, I would say overall. Definitely S&P 500 and NASDAQ. We're still above the trend lines. We'll see if they hold. And we are seeing some weakness kind of show up in rare earth metals, ETF, global lithium, copper's looking a little bit weaker. But it's not like a blowout crash. It's not just diving down like we've lost control, but it could happen where things sell off a little bit more in the short term. Oil's hanging in there. Natural gas is hanging in there. Precious metals are hanging in there. You know, when I look at this market, I'm kind of indifferent on it. I don't know how to read it to some extent because we're getting conflicting messages. We've got the 30 years holding there. We've got the curve kind of normalizing a little bit. And I know that's in the short term. It's not a long-term thing. But in the short term, it's normalizing a little bit. And there's a little bit of I think, I'll say people are a little bit scared is what I'm seeing. Fear in the market. We're seeing that also in the VIX. So the VIX the volatility, short term. Here, let's back out. I've got the wrong one here. So here's volatility in the S&P 500. Generally, when this gets real low and then starts to creep higher, that is when we could see some more problems potentially in the markets. And we can see that this thing's kind of, it's playing here. We could break to the upside. If that breaks to the upside, we could see a pullback in the overall markets, like we're seeing here in the short term. So it's possible. We haven't broken out yet, but we could see a pullback in the short term. And I know a lot of people ask me, well, you use the word could or should or whatever. I don't know the future, guys. This is all short term. Short term stuff is the least reliable in terms of its success. Generally, someone who can read charts very well is in the 60-70% range. That means 30 to 40% of the time I will be wrong. And that's if I'm really good. If you're bad, you're going to get it obviously maybe mixed matched where you're 60%, 70% of the time wrong and 30-40% of the time right. And then the market will just take your money continually. But I don't play the short term. I play the long term. And right now we have mixed signals all over the place. They are mixed all over the place, and they're mixed because you still have momentum with currency in the system. That momentum is slowing down, and they've done all this tightening to the wazoo in terms of interest rates, and the market was going to force that anyway. So we've got tightening that's there, and things are slowing down. But here's the problem that they run into. The problem is the system likes money. It likes liquidity. It likes the expansion of the money supply. In order for it to survive, it needs that expansion of the money supply. So they can do this, I think, in the short term, but I don't think they can do it forever. The problem is when they go to expand the money supply, the inflation comes back, and there's other things that are inflationary, like increasing interest rates and deficit spending. That's also going to be inflationary. So when you get that inflation comes back, it's going to go straight to the things that are short in the economy. And the things that are short are the things that are going to be inflationary, like energy, commodities, and stuff like that. So they're treading a line. What they're trying to do is they're trying to hold inflation down in a market that's short a bunch of different things. You can destroy inflation by killing the demand, or you can destroy the inflation by increasing the supply. The problem is a lot of what governments are doing around the world are killing the supply. And the central banks have basically no other option but to kill the demand. Here's the problem, though. If you've got deficit spending, if you have that inflationary force there, it's just going to make the supply problem worse. So they're kind of stuck in a spot where you can do what they're doing to an extent. Things will start to blow up. And when they blow up, what are they going to do? They're going to have to reliquify and put money where it needs to go. Problem is, if money comes into the system, it exposes the shortages in the system, which will be inflationary. So whatever they dump into the system to fix whatever problem they have, it's going to end up being inflationary because of the supply problems in the system. So when are they going to be putting more money in the system? Our interest rate's going to come back down. And if this starts to slow down, you should see interest rates go back down. Problem is, they have to keep interest rates up in order to keep the inflation in check. They know that. So what happens? Powell says we're going to keep rates at a high level for a very long time. That's the only way they can control this or slow it down. If the rates were to come back down, the housing market, I think, is going to speed back up. You'll get inflation back in the system. Credit starts to come back in the system. That credit is new money, and it's inflationary because it's going to expose the shortages of supply in the system. So he's going to have to kill the housing market in order to keep inflation in check. And he's going to have to, unemployment will go up at some point, and we could see a pullback in the markets. The next question is, what is his plan? What's his plan after he raises the interest rates? What's he going to do next? Is he going to let it all fall apart and hold interest rates high the entire time? I don't think so. But then if you release money back into the system or allow it to come back in the system, you're just going to get the inflation again. That's what's tough for him being in that position. But if you guys like the content, give me a thumb up. Subscribe to the channel if you haven't already. Check out the website. Subscribe to the website. Try it for a month if you want. Join our community. We got a lot of people putting in stuff into the community, and hopefully it benefits people with a lot of the stocks that we're looking at and the picks or whatever you want to call it, because it highly depends on what you choose to do and how you want to weight it and whatever you want to do yourself. I just throw out ideas and I throw out companies that look good, and then you guys can do whatever you want with them. All right, guys, that's all I've got for today. We'll catch you next time. This is Finding Value.